Josef, it's the day of the Lehman collapse. It's filing for Chapter 11. Just kind of talk me through how you found out about it. Kind of just kind of give us the recollection of what that moment was like.
First of all, we felt that this is very unlikely to happen. We really thought that at the last minute, U.S. government will jump in. I was traveling from Zurich to Frankfurt when I got a phone call from our U.S. head telling me it's over. And that was really the worst case outcome. We haven't expected that.
So what was the first thought that went through your head? Do you think Deutsche Bank? Do you think the wider system? What was going on?
Well, of course, we were not completely unprepared. So I wasn't concerned so much about Deutsche Bank because we knew that we had things under control. But I was very much concerned about the systemic risk. And at that time I said, this is systemic risk and we need a systemic answer. With what a bit criticized by some people who said, we should play the market and not ask for some government support. But the problem was really so big that I think we couldn't have made it without that.
So you were aware at that point of the kind of the magnitude of what was happening?
Absolutely, absolutely. I mean, this was a central player. And, it showed that the liquidity problem was the most important one. And if the funding disappears, that could happen to other institutions as well. And then you realized how interconnected we were in the financial system. And, that was no surprise to me.
So who did you call next? Who was the next phone call? You've spoken to your guy in the US, you figured out that...
Well, of course, you call immediately, the head of investment bank or sales and trading, and certainly the risk manager, treasurer, and then, of course, you reach out to central bankers, you reach out to other bankers. So this was a lot of communication going on immediately thereafter.
So you spoke to Trichet fairly soon afterwards?
We also talked to Trichet, of course, who was very concerned, but also to the head of Bundesbank and head of other banks, I think Bank of England as well at the time, because we were a key player in the British market. So, absolutely.
In terms of that kind of that linkage that you describe, and the preparation that you put in place, how are you set up going into it? What do the counterparty risks look like?
Well, you also have to look at it from a netted point of view. So in derivatives, for instance, you have an exposure to certain counterparties, but they have an exposure to you. And the question is on a netted basis, is that something you can live with? And so we were pretty sure that we were overexposed on a netted basis to any counterparty risk. That was the first thing. The second, of course, we always thought that we need enough liquidity, so we did a lot of funding beforehand in order to be well prepared for that. And the third one, you always try to have your market risk under control. And it started much earlier, actually in 2007, and I was fully convinced that this is not just something which will, last for 3 months and then disappear. Because two things, imbalances on the debt level and imbalances in the real estate market, normally they last much longer to find an equilibrium because, real estate is not such homogeneous goods, so to find buyers for that and have a demand, and of course I knew that and expected that, certainly as an economist. So we started to reduce our risks in 2007, and actually at all the conferences, I was also chairman of the Global Association of Banks and Insurance Companies, I warned that we have to get ready for that and change the system we are operating.
In the conversations that you had sort of in and around the Chapter 11 filing, you talk about the surprise. You were surprised. You didn't think the US would go this far and step in. Was there a sense of panic in any of those conversations? What was the tone like?
No, I must say, actually, we did, I think, pretty well. The media played an important role by calming down. There were no run on banks by saying, well, they're all bankrupt within hours. That has not happened. Then, of course, government stepped in and said, things are safe, are under control. Big programs were announced, and banks were also saying, what is really the direct impact of Lehman to me, and what is the larger impact on the financial system? And I think we all were very calm actually and reacted. But I have to admit that then AIG came. and that would have added another time bomb. So that AIG was bailed out, I think, was a very important message.
It's interesting you bring up AIG, because that was kind of where I was going to go. When you look at the kind of the risk, the tail risk, about how bad it could have become, this was a systemic failure. This was risk that was hard to calculate in many circumstances, and you throw AIG into it, and well, who knows? But did you guys have an idea? Did you, in the back of your mind, sort of think, look, it could go this far, and where was that point?
Well, that's why, at the conference I was on a panel, and I said we need a systemic response, and we had a meeting in Washington, actually, all the bankers, and Christine Lagarde came at the time and said, we will support you, don't worry. And then Europe announced a big program, and of course the US with the TAR program, and then it showed that, governments get really involved and want to bail out, to some extent, the banking system. And I think it was an important message.
Was everybody on the same page? Was everybody pulling in the same direction?
No, not everybody liked it. I mean, first of all, there were also even Nobel Prize winners who said we should actually let the market play, have asset prices go down, even if capital will be somewhat low, and then you find fast an equilibrium. And I was clearly of the view, and many others, that this mark-to-market spiral was very, very difficult and almost deadly. So we always asked to some sort of a compromise that we could move certain trading assets into a more banking book-like treatment, and that was also an important message. Although I would say, in hindsight, mark-to-market played very well, but some of the banks had huge losses because market prices collapsed to a level which were never expected before. I mean, the student portfolio, I think, was down in the US down to 35 or something like that, which is normally hovering around 90 to 95. So it just showed how absolutely disastrous this price development was.
Do you have any regrets looking back on it now? We're 10 years on, roughly 10 years on from that period. Do you have any regrets in the way that you, Deutsche Bank, the collective handled the situation?
I must say I just a little bit read, what we did in order to be ready for the interview. And I must say, at the IAF, very early, we put together a working group talking about lessons to be learned, I think banks were very active and proactive in dealing with it and improved the situation. We changed the compensation schemes, more long dated, and many other things. So in that sense, I would say, yes, there were excesses before the crisis, and I would not defend that in any way. They were wrong, and compensation was a big issue, the incentive schemes, but also we went with too little capital into too risky assets for many banks, and the funding structure was wrong. Hyper real estate, for instance, a 400 billion euro bank had a very short-term funding and long-term assets. And of course, when you cannot fund anymore in the money market, you are illiquid. And Lehman was a bit the same problem. So that's certainly something where a lot of mistakes were made, no doubt about that.
One of the criticisms that is leveled at German banking and French banking was that they were buying stuff they really had no idea about.
Well, but not the big banks, of course. Everybody felt a little bit that they understand the asset quality, they understand the products, and we're very happy and proud of doing this. But of course, in hindsight, I mean, you can say, that many of the risks were distributed not to those who could bear them, but to those who didn't understand them. And there's some truth in it. But you could say, did we do that on purpose? No, absolutely not. There was a strong demand. And when I in 2007 said to our own people, reduce risk dramatically, and some people bought it from us, I was criticized internally by jeopardizing our bonus by year end, because people felt it's just going down for a while and then it comes back, and those who sell on the way down are taking huge losses. Now these losses were in hindsight very small compared to those who bought the assets and waited. So in that sense there is some truth in this statement as well.
One of your successors, Jürgen Fitchen, recently talks about the idea in an interview that Deutsche should have taken state aid. Thoughts?
Well, we asked, first of all, in an opinion poll the German people, and 70% were very proud and said that was the right decision. Of course, it's always easy to take money from the government as an individual and also as a corporate or as a bank. On the other hand, you pay a high price. I mean, you would have a compensation cap, people would have walked out, and secondly, it would have been a huge reputational risk. But there's also some political statement in it. I was brought up saying you don't take money from taxpayers if you don't need them. And we didn't need them. Maybe it's a bit different in Germany, the attitude, than in Switzerland. But in Switzerland, this is a strong belief. But I'm absolutely, the head of the Bundesbank at that time, Axel Weber, called me and said, this was the most important decision you have taken. And I'm still very much of that opinion. This made us so strong on a global scale for many years to come.
He said it was the right decision?
Absolutely.
What else did he say about, and do you think he still holds that view now? Have you spoken to him about it? He's here in Switzerland a lot of the time, I suspect.
I haven't challenged him on that now, but I'm pretty sure that he would still support. Everybody supported that. So there's in the board of directors, in our advisory board, everybody was. No, we got a lot of applause everywhere in the world for doing this.
With hindsight, though, Deutsche Bank is now struggling. You can compare and contrast Deutsche Bank and its US peers, the US banking system has recovered. The TARP program, etc., was used to recapitalize the banks, and it put them on a trajectory that is so different to the one that we now see here in Europe.
Well, that's one point. Of course, if you recapitalize them, almost by forcefully, by force them to do so, to accept it, that's a different question. But if you are recapitalized voluntarily, as the European system was, people would have, I was criticized already before this program came out for if he takes taxpayers' money, he will have to go, and the bank would have really suffered from it. Now the US system is different, but there's a different issue here. First of all, what people always forget, after the financial crisis, or actually coming out of part of the financial crisis, Europe ran into the debt crisis, which was for banks, even for most banks, more challenging than the financial crisis. And the US didn't have that. Secondly, we had a very low interest environment for very long. And thirdly, we didn't have a restructuring. We bailed out, with very few exceptions, the failed bank, kept them somewhat in the competitive landscape, and they are still operating. Whereas the US has done something completely different. They more or less took the bad assets out, and the better assets were moved to the large banks, and now you have a completely different competitive landscape. JP Morgan has now a market cap, and I congratulate them, I'm not negative, but of $380 billion, whereas Deutsche Bank is hovering around 20 billion euros. If you add UBS, Credit Suisse, and Deutsche Bank in the second quarter 2018, they made not a third in terms of bottom line of JP Morgan. So US banks have become much more dominant, and that was really a completely different strategy.
Did Europe make a mistake then? Should Europe have forced recapitalization? Should Europe have forced assets into different...
Well, that's a very much a psychological question. I think in Europe, people would have been less pragmatic. Who talks in the US about Goldman Sachs or Morgan Stanley or JP Morgan or others having been recapitalized? That's long forgotten. I mean, we are still talking about, legacy assets, legal costs. So in the US, I just spent 2 weeks there. Everybody is looking, to the future and is doing the right things, and all the things are long forgotten. And I think that was one of my resistance elements that I thought, in Europe, in 50 years, people would still say, I had to save this bank, and so, and they are overpaying people, and I had to bail them out. And that's why I didn't want to have that. So it was such an important political and psychological message to say, no, we don't need it, and we will not take it.
But we now find ourselves in a situation, does Europe have an investment bank now? Does Europe need an investment? Are the markets different? You look at the landscape, and it's dominated by the big US players.
Yeah. No, I think that's a huge mistake. I mean, we had, Deutsche was number 2 or 3 on a global scale. Barclays was a major player. And also the 2 Swisses were quite important in investment banking. And in today's world, the US are absolutely taking over that market. Is that good? In a climate of America first, shouldn't the Europeans try to change that and to have one global investment bank? Because capital markets is absolutely going to dominate the future. Disintermediation. People are investing and others are borrowing in the capital market, in the money market, not in the lending market going forward. And of course, the US has 2 major advantages. They originate mortgages, but then they are moved to state-owned entities. And secondly, if you look at the derivative portfolio, we are on a gross level, they are on a net level. So if you talk about leverage, it's no real comparison with the US banks. But no, the US did very well, I have to say. And of course, they started to grow earlier. Interest rates went up earlier. And that's all very difficult for banks. And let me add one point. We are still operating in a benign credit environment. If this low profitability comes into, which I don't hope it happens, but into a recession or into a different credit environment, then European banks will suffer a lot.
Does Europe just become a backwater now? Is that like post-Brexit, you take the City of London out, where does that leave the European banking landscape?
Well, we have to do everything, in my view, to somewhat create a single market and a European market with the same regulatory environment, and so we can have more cross-border consolidation moves in the future. That's the only way I see which can happen. To focus on domestic consolidation is very challenging, given the restructuring, given the integration in a market, where unions and others are very much opposed to that. But also, you are just adding more into a very competitive market. And in that sense, cross-border will probably be a better solution.
You were mentioning the fact that cross-border deals would probably be the way to go in terms of sorting Europe out. So let's pick up on that at that point. So by saying that, what you're indicating is that you don't think a German combination would be one that would be talked about, and obviously the names that instantly spring to mind are Deutsche Bank and Commerzbank, putting them back together. So the rumours are back again. Do you think you can see that ever going anywhere?
Well, I'm not familiar with the current analysis of the 2 banks. Of course, we looked into that for years, and we always came to a negative conclusion. But maybe things are different now, and certainly the willingness to accept major restructurings are much higher now than a few years ago. But yeah, I'm in favor of cross-border, because if we have a strong financial market in Europe, you need banks operating a little bit beyond your home turf. The problem was, at that time, we had discussion with several banks, and the problem was always where to be incorporated. And it's very difficult for a bank with like Deutsche Bank, with a strong German brand, to be willing to move somewhere else. And so we always said no to that. And the same is true for other banks, of course. To move out of Spain or of Italy or of France would be quite challenging, as long as we have this political thinking. Once we start thinking European, or in global terms, things are completely different. And I think we have to move there. And to say whether we are incorporated in Paris or in Frankfurt is not as important. It's more important to have a strong European competitor to Chinese and US banks.
But the irony of that is that a lot of Germans simply don't care about Deutsche Bank anymore. It is Deutsche Bank, but they shrug their shoulders and they don't have any sort of affinity with the name or the institution.
Well, you know, in Germany it's very often like this. If things are going badly, they are very negative, and if you come back, then they are very happy about it. I must say, I'm still, when I travel in Germany, people, you know, come to see me and are very friendly and so, and they would like to have a strong German bank. I think they would like to have a Deutsche Bank which is operating successfully again on a global scale. That's no doubt. And then things will change rapidly because they need it, and they're very proud of. It's a bit like in soccer. I mean, they would like to have, you know, someone who wins the championship.
I don't think the Germans very much want to talk about soccer at the moment. I think that's a very touchy subject.
Yeah, but it will come. It will. You will see. It will come back if they win against France in a few weeks' time. Things will
change the coach.
So you know, that's always a bit jubilant and then very negative. But the fact is, if you ask people, do you want to have a strong German bank operating in the world, the answer would be absolutely yes. I have no doubt about that.
Christian Sebing's trying to diversify the business away, though, from investment banking. You tried that. In some ways, you succeeded in doing that. But can you speak to the challenges that brings, the integration of Postbank, the desire to be more focused on retail? The German market is incredibly fragmented and incredibly difficult, therefore, to make profits within.
Yeah, we tried very hard, and organically, I mean, I'm not saying we were not successful. We moved from a very low profitability to, as I said before, 4 billion in 2011. So it's a fantastic achievement. But it was very difficult to grow organically because of the competitive situation. And there was not many opportunities to buy into the market before the financial crisis. It then changed when, you know, Sal. Oppenheim or Postbank or others became available. And we did that immediately. But you also see in other banks that acquisition is not all. So, you know, you can also make mistakes. But it is a very challenging retail market. That's why not me, even my predecessors, actually 6-7 years earlier, said the only way to a larger scale is going into investment banking. And that was, you know, a lot of people applauded that, and I got a letter at the time from very famous European bankers saying, you are the only one who made it. I mean, Deutsche Bank got into global investment banking in a very short period of time, and that was a huge achievement. Then, of course, came the financial crisis, which we went through without any major loss, contrary to you know, JP Morgan or UBS or Societe Generale, and we didn't need any money from the government. But then later on we had the legal risks, not as big as some of our competitors, but we had them too. And you know, that is a bit also has to be explained. Unfortunately, we didn't have, you know, many court rulings on that. It was so settlements in order to, you know, keep everything quiet. But I think the US played really hardball, not only with the European banks, even more so with the US banks. And I you know, when Barack Obama came into power, he sent an email, and I still remember the last sentence: "Join me in fighting the Titans of Wall Street." So that was very much the attitude at the time. You know, let them get disciplined better, and let them pay for it. And that was the attitude. So yes, we all paid a lot. I mean, much more, of course, in the US than in Europe, and that changed also a little bit the understanding of investment banking in Europe. The people said that's not a good business, but There were excesses. I'm not defending that there were no. But on the other hand, this is a very important business, structurally so important, because you have more and more disintermediation in the financial markets, and you can only play a role there as investment bank, not as a pure lender. And the credit margins have been very low, and so investment banking was the only way really to make money. And I think the U.S. banks have really completely captured that now.
I read a note the other day, and it talks about Deutsche Bank fading away. How do you? One of the situations that you could see that happening in is if it continues to lose people. Banks are collections of people in many ways and capital, and I'd be curious to know your take. If Deutsche Bank were to fade away, is it simply because good people leave?
I hope it will not happen, and they still have my full sympathy, because that was my most important part of my life. But what is clear in banking and in other business as well, you can talk about technology, about IT, that's all important. But at the end, it's a people's business. If you go as a private banking client to see your bank, I'm not so concerned whether I have access through internet, left or right. I want to see a banker who gives me good advice, who helps me to grow my net worth. And the same is true in M&A business. I mean, most important is to get the right advice, to have banks who have the networking and the distribution capabilities, and therefore you have to retain your talents and to attract the talents, and I hope they can do that. But that's the most important.
Do you think that's happening now? Do you think people are just simply walking out the door?
I don't know. I wouldn't like to comment on that.
Where do the risks lie? To kind of wrap this all up, we're 10 years on from Lehman Brothers. Is the financial system safer now than it was? Is regulation working? Do we understand where the risks lie in the system we now find ourselves with?
I would absolutely say that the system is safer. We have more capital, we have a much better funding structure, and of course we have much more supervision. I mean, almost micromanaging as a shadow board, what's going on in banks. So in that sense, it is a completely different world. But there are still some open questions. I mean, one is the nexus between sovereign risk and banking risk. That's still not solved. We don't have a European deposit insurance scheme, which would be an important element of a banking union. And we have, which always led to a crisis where either irrational exuberance or imbalances in real estate and in the debt market. You can start with the real estate market in some parts of Europe in the 90s. Then was the Asian crisis, the Russian crisis, dot-com crisis, financial crisis, debt crisis. It was always exaggerations which people didn't stop at the right time. Could that happen again? Absolutely. We have a huge indebtedness, much higher on a corporate sovereign level and individual level, much higher than before the financial crisis. We have a very global flow of capital. Look what's going on in Turkey, where it was a foreign currency funded and led credit growth. So in that sense, these are imbalances which can create some spillover effects into other emerging markets and could create some sort of. That's why risk management is very important. Leverage, I must say, I was opposed to that, but today I'm a big supporter of a leverage ratio, because it just shows you that you are not growing the balance sheet too much. And so that's another important element of the new regulation. And but I think that we also have to see that global crises are under control, because normally it starts from some tensions in the world. We have it now on the trade side. We have it in some emerging markets. We have, of course, asset inflation due to a very strong quantitative easing policy of central banks, which one day we have to change. And what's going to happen? Will interest rates go up too quickly? Will that be difficult for borrowers to sustain that? Will that create new provisions and credit risk and all of that? So there's a combination of things which still is not completely under control, and will never be under control, because I think we should not forget, if we avoid all the risk, we have soon no risk to avoid, because we are not in business anymore, and we need the trade-off between growth, which comes through innovation, entrepreneurial spirit, and also banking and financial system supporting that, and financial stability. And this trade-off will always pose a challenge, and I think we have to live with that. And we will have, phases where everything goes fine, and we will have maybe some incidents which are terrible, and that's part of the way market economy works, and I'm actually a strong supporter of that.
One final quick question. You ran Deutsche Bank at the time. Axel Weber ran the Bundesbank at the time. You're both sitting downstairs on September the 15th having a coffee or a drink. How do you think that conversation would go? What would you remember? What would be the things that stand out? What do you think you'd talk about?
Well, we had, of course, major challenges in the German banking system, and I have to say we worked extremely well how to deal with that. I would say the supervisors, regulators, the Bundesbank, and probably Deutsche Bank, and we worked together, and I think we really solved hyper real estate, IKB, many others. But interesting what we talked about. Some of the challenges we just touched upon. And together also with the finance minister at the time. We had a meeting, a dinner, and we said, what should change in the German banking system to get somewhat more profitable, but still, of course, meeting the requirements of clients, but also to allow banks to be more profitable and stronger going forward, not only in Germany, but certainly on a European, if not global scale. And we had this discussion, and only days later, the whole situation started with Lehman and so on, and then I think we never got together to continue that discussion.
Who invited who to that? Was that?
It was the finance minister, Steinbrück.
He invited you all to a dinner at the finance ministry, or where did?
No, it was somewhere in the middle in a small restaurant.
Thank you very much indeed.
It's a pleasure.